right, everybody. Welcome back to this segment. This is Chris Gallo, Flip and Hold Funding Realty Solutions. We're talking through our lending vision today, and we're talking about these 5 tips to help you get approved with hard money lenders like us. We told you, we broke down a quick summary of what hard money is, who we typically lend to, and we gave you your 5 tips in detail. They were, number 1, have a clear exit strategy. Number 2, realize that this is short-term capital, not long-term capital. Number 3, credit habits matter. We want to see that there's been, that you can explain what's on your credit report, even though we only look once as a soft pull. Number 4, keep your loan to value low as possible, right? Number 5, move fast and finish strong. Those are great tips. Now let's talk about what hard money lenders don't care about, okay? Because there are some things that we don't care about. First thing is, I don't necessarily care about your W-2, your tax returns, okay? I don't ask for tax returns or W-2, but I do want to see a soft pull of your credit. I do want to see that you have enough capital and reserves, or you make enough money to pay my monthly interest, my monthly interest payments when they come in, but I don't need to see your tax returns or your W-2s, right? I don't care how long you've been on or been working at a particular job. Again, that doesn't really matter to us. And I'm flexible. We're flexible with your reserves, whether it's cash, if you have access to a line of credit, home equity line of credit, or other liquid assets. I just want to know that you have capital. You can put money down. You can pay my monthly interest payments through the duration of the loan. That's the biggest part. We look less at your day-to-day job and your W-2, and we look more at the deal, as we discussed before. Okay. Next thing we're going to talk about is how much does hard money cost? Okay. So typical hard money is somewhere in the range of 11 to 13% interest, 2 to 3 points origination points. We're lower than that. We typically are around 11 and 2, especially for we might start you a little higher than that. And then as you become seasoned with us and do successful exits, we get you down into that frame. And the cool thing about us is, as we establish a relationship, we let you put less and less money down, and we actually can add things like prepaid interest payments into your loan. So you're putting less money down out of pocket. Then we might add in a few months interest payments. So the first couple months of the job, while you're getting it going, you may not have to worry about an interest payment. We can do creative things with insurance, where a lot of times we ask for 12-month policies, but people that have a track record with us, we often let them go to 6-month policies, right? So people always say, what does hard money cost? That's the range. And typically, there are private lenders out there that might come in a little cheaper. But a lot of these guys also add a ton of junk fees to their loans as well. I always say, look at your HUD, look on page 2, and look at the junk fees, right? We have 2 fees on ours. We have an appraisal fee that I don't keep, that goes to my appraisal company, and we have an underwriting fee that goes to my underwriting company that checks all of our work. We don't keep any of those. Those are the only 2 fees, right? And then you have your points, okay? So that's typically what hard money costs. But if you do the math out, even if someone comes in at 10% interest and they make you put down 20%, right? Say I'm making you put down 10% or less. You could do 2 deals with me for every 1 deal you could do with that other lender. And the dollar savings is probably a few $1,000s at best, right? So you're giving up a few $1,000s to make 1 less deal. And what's the average profit on a deal? $30,000, $40,000, $50,000. So as you can see, it's really a no-brainer. Okay. What else can we talk about? Oh, what properties qualify? Okay. So here's where we really shine. We look at almost anything. That's real estate and that's non-owner occupied. Very important point. We do no owner occupied. We lend to LLCs. These loans are for business purposes only. And that's a great point. So, the properties that we typically lend on are anything condo to 4-family, whether it's new construction or a flip, buy, fix and renovate, buy, fix and hold. As I said, we love new construction as well, especially the onesie twosies. We have done some subdivisions for our seasoned people, but we don't do that for everybody. Bridge, land deals. We talked about flips, small commercial. Like I'll do commercial that has a mixture of multifamily with a couple of commercial components, maybe on the first floor. We've done that. Very, very comfortable with that. So if it's good and the numbers make sense, typically we'll take a look at it. All right. And listen, not all hard money lenders are created equal. I just want to finish this by saying, Google hard money lenders in Massachusetts, Rhode Island, Connecticut, New Hampshire, wherever in the Northeast. You can find good ones online. Go for the reviews. Talk to other borrowers. If you want to find out how good a lender is, talk to some of their other borrowers and they'll tell you. You can find people at networking events. We speak at networking events all the time. And real estate agents that work with investors, they're a great source as well, because they'll be very honest with you. And if the lender's not good, they'll tell you the lender's not good. But there's tons of sites out there, tons of ways that you can find us. And for us, we're all over the place. Google us, go to our website, go to our Instagram page. We're readily accessible, and we can't wait to work with you. We're going to wrap it up in the next segment, but I hope you've enjoyed this segment on hard money, 5 tips to be approved, and just some basics on hard money.